continue our mortgage series today with a look at mortgage-backed securities. After leading the financial markets into a crisis, are they now staging a comeback? Brian Lancaster, head of asset-backed debt securities at RBS Securities, says the market has definitely turned the corner. He joins us now from his firm in STAMFORD, Connecticut with more. Welcome to you, Brian. Are banks again finding buyers for these super risky assets?
Yes, very much so. We've had a tremendous rally since the end of last year around Christmas. Many of the securities are up 15, 20 points. Since we talked on this show last, when option arms were at 49, now they're up to 60 perhaps in price.
Who's buying them?
You're seeing a buying both from the street. Some of it's street inventory restocking, but more so, there was a little bit light at the end of the year, but more so there's PPIP money coming in, hedge funds, variety of buyers, money managers, insurance companies. In the agency space, for example, Fannie's, Freddie's, CMOs, there's tremendous amount of bank buying across the maturity spectrum.
Okay, so you're saying you're seeing a pop in demand for these asset-backed securities, but compare that to what you saw in the peak.
Yeah, I mean, it's nothing like what happened in the peak. Most of these are, all of these are virtually legacy securities that are out there trading in secondary. At the peak of the market, of course, these were brand new securities that were being created. They're being purchased at par, of course, and there was tremendous demand then, with pot lists multiple times oversubscribed in many cases.
The news of the day has been this Financial Inquiry Crisis Commission, and today they were really talking about the regulatory issues. Testimony from, among others, Mary Shapiro, Chairman of the SEC. She's proposing that the SEC will stiffen disclosure requirements for sellers of asset-backed securities. So is this going to make a realistic difference in protecting the buyers of these products?
I think it's helpful. The more transparency in the market is always key. And I think that you will see new securities being created this year, much simpler securities, more straightforward. So I think it will be a benefit. Obviously there will be new regulations coming down with the Consumer, Financial Act coming out in terms of, what types of homeowners can take out what types of securities. So.
And then, what does it mean for the banks packaging the securities, this tighter regulatory environment? Is it going to limit the profits?
Certainly, I think the industry will be smaller. I think it will be less profitable. But I still think it has a key role to play. We'll probably revert back to something in the late 90s. But the process we're going through even now is a very positive process in terms of the appreciation in these securities. As they get higher in value, it allows investors, insurance companies, banks that have had these securities sitting on their books, perhaps they're marked at 60, 65, they can now sell them. So I think that that's all to the good. As the market price increases, these bonds come off their books, frees up capital for other lending, other security purchases.
Our thanks to Brian Lancaster of RBS Securities. Now,